Action. And we are live. What's going on, everybody? Welcome back to another ETF Tracker show. I'm Cade Wolf. We have Thomas here on the stream as well. Gonna talk about all the things. We've got a whole lot of news. I don't even know the current state of the conflict because depending on when you're watching this, if it's in 30 minutes or right now, the Iran situation may have changed because apparently that's just how we do things around here and how President Trump is running things. So I figured in terms of the Iran war, we'll cover the fact that Iran is now accepting Bitcoin as payment. That sparked an entire debate across Bitcoin Twitter and crypto Twitter, whether or not that's like the form of payment people should be accepting. There's all sorts of arguments you see on both sides of the aisle there. We have Blackrock and Statestreet launching ETFs to compete with the Qs and a couple other big time ETFs, which I thought was really interesting. We have Morgan Stanley coming out with their new Bitcoin ETF, MSBT. We have the founder of River, a Bitcoin company, coming out and calling out finance platforms like Coinbase, like Robinhood, for their participation in the prediction markets and gambling and stuff like that. We have people like Plan B, notorious for their bullish behavior, coming out potentially being slightly bearish. We have Adam Back. I guess he had an interview or something that came out, and so he went and addressed it on Twitter that he is not, in fact, Satoshi Nakamoto. And so there's all sorts of stuff going on in the Twitterverse. Excited to chat with you guys and cover it all. Thomas, how's it going, brother?
Yeah, doing good, man. Good intro, Cade. Like it. I'm excited. Lots to talk about here. So, yeah, let's get into it.
Oh, yeah. Yeah, for the first story here, I figure we'll dive into this. This is kind of like, it just got shared earlier today. It was a really interesting piece. It sparked a lot of debate, not just on Bitcoin and crypto Twitter, but across just the finance, fin Twitter, just in general. And this is when, so Thread Guy's a big time crypto streamer. He basically came out and he tweeted that Iran accepting Bitcoin as payment is bad for Bitcoin because they will discover Bitcoin effing sucks for payments. And this came from this post coming out of Financial Times. Iran is accepting Bitcoin as payment. You can see here that vessels are given a few seconds to pay in Bitcoin, ensuring they can't be traced or confiscated due to sanctions. And it sparked this whole thing about it. Obviously, yesterday, Trump went on, was like, hey, ceasefire. And then Iran's government thought that meant something else, that meant we were just going to sign up for everything that they had proposed. And so now it seems like maybe there isn't a ceasefire. I don't know what's going on, and I feel like I'm not an expert, and it keeps changing every 6 seconds. So we'll just focus on the Bitcoin side of the story. But Thomas, tell me some of your thoughts on this. Do you think it is a good idea for Iran to be accepting payments in Bitcoin? Does this make logical sense? We have Lightning Network on one end. The other people are saying, well, why wouldn't you use stable coins? Why wouldn't you use Solana? Why wouldn't you use XYZ? So
actually. Yeah, so I'm glad. It's a funny comment from this guy because clearly he doesn't get it. Bitcoin is not just like, well, first of all, it's not a bad use of payment. It's actually the opposite. It's literally the only use of payment that you could possibly use if you're Iran. Every other form of payment is not censorship resistant, which means to say, they will get their money frozen if they try and use literally anything else. Literally anything. I mean, what are you going to use? Stable coins, and then Tether's going to come along and you're frozen. Or Celsius. Or I'll go on my log into my Coinbase account and use stable coins. You're not going to use your Morgan Stanley bank account. You're not going to use your JP Morgan. There's nothing they can do in the dollar system. They will get frozen. Maybe they could use the Chinese yuan, but then again, they're kind of an outlaw state, right? Like seriously an outlaw state, and they'd probably be worried about being frozen on that end too. So yeah, if you're these like essentially, what are they, pirates essentially, they're these like Iranian pirates that are controlling this Strait of Hormuz. Well, even if they are the state themselves, they have no system, right? There's nothing they can do to accept money except Bitcoin, and they're not going to use Lightning Network or anything like that because it's not fit for purpose. It needs to be able to receive money at scale. You can't. I mean, maybe Ethereum, but honestly, why would you? Like the only thing that's even remotely decentralized enough that you could feel, even if you use Solana, what happens if the government goes up to the founders of Solana and says roll back the chain?
Yeah,
like that's what they do. And so there's nothing.
You need something that's not controlled by anyone, right? And it needs to be as like a separate player.
it has to be totally decentralized, neutral money. And there is, I mean, the only other option, actually, funnily enough, would be gold. But then again, what are you supposed to do? Bring ships, like bring massive bars of gold on these ships and then how do you store the gold? It's just a big honeypot so you can't actually, I mean, I say gold in a theoretical sense that yes, it's decentralized and neutral money, but you can't accept form gold payments. So can you imagine can you imagine the payment process? Like, oh yeah, just come on, come over to our boat, bring your bars of gold, and we're just going to be pointing these guns at you. And like, what a mess. So no, it has to be Bitcoin. There is no other option. Very interesting because this is something, as Bitcoin it's certainly been talked about for a very long time, right? Like global neutral money. What happens in a state of uncertainty, in a state of distrust? This became a big story. This was like a theoretical concept, and then it became a really big story, I would say, in 2022, when Russia had their bank accounts frozen by the US. The US essentially said, no, we are just taking that money. Thanks, that's ours. And consequently, it was sort of hypothesized like, hey, if you're Russia, why wouldn't you start accepting payment in Bitcoin? But I guess, the Russians still have their own ruble, and they're trying to fight for the preservation of their own currency, whereas Iran is a little bit different. Their local currency is such a mess, it's got essentially no value, that they really have to use an external backing currency, and Bitcoin is perfect fit. I don't know. I mean, Cade, my question for you is this actually good for Bitcoin? I mean, it's good for Iran. It's certainly good for Iran because they have a mechanism to get paid.
Yeah.
But is this good for Bitcoin? Because on the one hand, you can say, well, there's a little on the margin extra demand for Bitcoin, and also marketing for Bitcoin, because what we're seeing right now is like, hey, here's this obvious use case. So that's all positive. On the other hand, it's kind of like gets back to this old like, terrorist money. Yeah, this is, we should be outlawing.
It really depends on whose like opinion you care about. Like I think for the average person, you're going to get like a 50-50 split on whether or not they think it's a good idea. But then you got people like Larry Fink and people who are like the sovereigns and who are buying this asset because of the same reason they've said a million times. They're like, hey, there's certain assets you want to stack because we know the system's kind of cooked and we all sort of are broadly aware of it. We also can't exactly do anything about it. So it's just a big system. So you can, have some hedges like some gold, some Bitcoin, and a few other assets like that. I think it's almost like a stress test on it. It's like, hey, like, could this actually work? And even if it's not perfect, it's like, hey, like, we need options for situations like this. For me, like this past year, I sort of like learned the exact the pitch for Bitcoin, right? And for a while, I was like, oh my God, like I figured it out. Like, oh my God, it's going to be this. This is the cycle. This is the super cycles. It has to be like, how is it so obvious? This is clearly the debasement trade. It's over. Bitcoin to 500K this year. And then I realized that was the same conclusion that everyone sort of comes to on the Bitcoin side of things. And that's, it doesn't matter if you came to it 2 years ago, 5 years ago, 8 years ago, or like next week kind of thing. So for me, it's like, okay, this is cool. This is like an exact example of where Bitcoin is a very helpful tool and sort of like an answer for solutions like this and many other solutions. So for me, I'm like, yeah, this is great. This is a good thing long term. And it also kind of goes into my thesis that like the Bitcoin argument could take a very, very long time to play out, right? Like a very long time. The system is set up in a which where they can kind of continuously kick the can down the road no matter how bad it gets. Like we're sitting here going, oh my God, there's $38 trillion of debt. Like it's over. Like it's obviously going to be soon. But then I could see the same exact argument at 58 million or 58 trillion. And we're having the same discussion, dude, that's a 58 trillion. Like it's coming soon. And then it's like 100 trillion. Then you're like, Okay, we've been saying this for 50 years. Like at what point? So I don't know what that's going to look like, but ultimately I think this is a good thing.
Yeah, I have mixed feelings as well, because on the one hand, see, unlike say Larry Fink, this is actually real demand for the real Bitcoin, like not some derivative of Bitcoin. We're not talking about a Bitcoin ETF. We're talking about real Bitcoin. However, if you're a Bitcoin investor, if you are a holder, and let's face it, you want the price to go up, where is the capital that's going to come to pump your bags? Where is the money coming? And you have to say it's institutional money in the US. That's where all the capital is. It's in pension funds, it's in endowments, it's in trusts. And, we're going to talk about this more with like the Morgan Stanley story, but that's probably on the margins where the real demand is coming from, I would suggest. And how much does this kind of negatively affect the story? I'm not sure, because it's a proof point for the real use case versus the ETF. See, it's interesting because when you buy an ETF, it's like, oh, I don't really need the properties of his censorship resistance. I don't really need the properties of, money that can't be effed with. The reason why I'm buying the ETF is because I'm betting somebody else does need those properties. You see what I'm saying?
Yeah.
But whereas in this case, you're going, there's more money for the derivative products than there are for Iran is in that unique spot of like, they need Bitcoin and they desperately need Bitcoin and nothing else, but not many people are in that actual spot. Right. There's a lot of money that could buy Bitcoin because of the idea that other people will need it, but not necessarily because they need it. Like if you're in the US, chances are you're not about to be debanked, although we have had periods in recent times where that was an issue. So I might be wrong about that. But, it's this censorship resistance, which is such a core pillar, like the decentralized censorship resistance is such a core pillar of the value proposition. And yet the money is flowing into these ETFs and these MicroStrategy and these derivatives, which don't really have that value proposition. However, it's like a bet that other people will need it. So it's quite interesting. I think this is probably a positive for Bitcoin, the fact that Iran is doing this, because it also makes you go, what other countries might be put in that position? And certainly if we were to start seeing Bitcoin become the petrodollar, and I say dollar, I mean the petro Bitcoin, the petro payment on a global scale, and that changes everything, right? Like this is Iran, this is the Strait of Hormuz, this is one very specific use case. But if we started seeing other countries around the world kind of adopt this play as having the belief that this is actually the most logical form of payment for them, then that really would be a big deal. Yeah. So I guess we'll just have to wait and see. I think it is positive for Bitcoin. And probably the other thing I will say is anything that Bitcoin can get right now that's maybe positive is a really good thing, because for the last 6 straight months, the only time Bitcoin has ever been in the news, it's been definitely bearish. The only time we ever, isn't it nice to have something that go, oh, well, that might be good for Bitcoin? Because every other thing is like, well, quantum FUD, or MicroStrategy is going to die, or this, or that, or this.
Everything's been price related. It's the first like non-price related. Hey, look at Bitcoin, and I think the price and the market cap of Bitcoin hurts a little bit, because you're like, hey, like this is so cool, you can use this. Like, yeah, but what if Bitcoin crashes 10% in 30 minutes? And that, I mean, the thing is, I guess that argument's falling apart because you got gold and oil also moving, 10% in 20 minutes. So I guess the argument's maybe falling apart. It's still a small asset comparatively, but I think it's like these types of allowances, I guess, for Bitcoin, I think move the needle pretty far. And, especially with, the price is going to do what the price is going to do. It's going to take a while for the asset to get to the size of gold. If hopefully, if it ever gets to that size, I think it could. It's going to take a long time, I think. But Bitcoin is a unique asset. You know, it's hard to deny that, whether or not Bitcoin's at the top or the bottom of a long-term range here. Bitcoin has some pretty unique properties, as do others. But in a situation like ours with our current fiat system, I think more and more people each year will be won over by it. I mean, Bitcoin would have to just fall apart for 10 years straight for, I think, majority of people to just completely lose faith in it, which is possible. But I always think back to the gold and silver bugs who held their gold and silver for the debasement trade that took 45 years to play out before they saw 2x. And it's like, I don't know, dude. Like, it just depends. If you break down what Bitcoin is there for, you think it makes sense long term, maybe make it happen.
Well, you know, just on that, by the way, do you know that if you go back to 2000, the start of the century, if you could put your money in any stock index or buy gold outperformed significantly outperformed. The shiny rock outperformed the best stock markets the best capital markets in the world. And by the way, that includes, to your point, the perception of the bugs waiting 50 years, because they didn't wait 50 years, but they did wait 10. So you had this, you did have, during that 25-year stretch, 26 years now, I guess, you did have a period from 2011 to 2020, roughly, a heck of a winter for gold, like 10 years of just absolute, just terrible performance. And it was such an ugly time for gold, because not only did gold do badly, but every other asset did really well as well.
Yep.
And yet, notwithstanding that 10 years, when you look at the whole 25 years, gold crushed it. Gold's actually outperformed everything. So I kind of like, we're going to get something similar with Bitcoin. I really feel that it's going to be like, the most painful trade is to hold Bitcoin, because you're going to go through these periods where you just have to eat it. Like, you really eat it. And the one thing about Bitcoin as well is it's the funniest thing. And I kind of have this because, you know, people know me from X and talking a lot about Bitcoin and this sort of thing. You get this real funny dynamic in your life where at certain periods of time you're like, oh, you're a genius. And then another time it's like, you are the biggest idiot in the world. Like, oh my God, you idiot. You are such, and it just bounces across.
Oh,
like,
yeah.
And you have this really funny, but over the long run, it does fantastically well. But if you like, it's, of course, you know, we are wired. We're only human beings, right? We do care. Like, it's all well and good to say over the long run, but you, me, and everyone else really does care about what my next 3 months performance is going to be like, what my last 3 months performance is going to be like. It's foolish to pretend otherwise. It's like kind of a cope to pretend like you don't care. I mean, it's just not true.
Yeah.
But it's an interesting thing. Anyway, we've got so many stories too, so let's keep moving.
Yeah. So one other one that's interesting, you know, speaking of people who been in the game for a long time, BlackRock, Statestreet, now launching ETFs to challenge Invesco's grip on the NASDAQ, right? You got the Qs. Let me see. I think it was ETF Tracker that originally posted this video where I'd seen it. Yeah. So BlackRock, Statestreet coming for the QQQ. They both filed NASDAQ 100 ETFs. And this is coming out.
Wall Street's largest
Define.
topic, it feels like, in the ETF space.
It's really incredible to watch. You've seen the QQQ, which has been around since 1999, and now the competition is intensifying. We've seen this before in the ETF space. We've seen it with other broad benchmark indexes like the S&P, for example. We've seen this even in commodities like gold. And here we are with the NASDAQ 100 seeing more competition. And we expect, this, to continue as we see, like, BlackRock and Statestreet looking to join the party, so to speak, alongside Invesco.
Yeah.
But ultimately, this is a good thing for investors. More choice, and it's continuing to drive fees down, which has been a trend we've seen in the industry for a while.
So
I believe there might be another clip here, but just, I don't know if you have any knee-jerk reactions to this.
Yeah.
Competition.
Yeah, so I think as an investor, where this gets actually interesting is this going to drive more capital towards the NASDAQ? And I think that's where it gets interesting, because otherwise it's like, oh yeah, they're going to fight amongst themselves for a little bit of investment here or there. And honestly, do I really care about the profitability of State Street and Blackrock and Invesco? No. Why would I care? You know, however, if they can induce more demand for certain types of products, certain like the NASDAQ, or that's something that I want to take into account as an investor. I'm not sure, because I feel like it's such a mature market. The QQQs, like, this is such a famous index. It's been around decades. It's got hundreds of billions of dollars. I can't really see this materially changing. I think, it's almost, it's kind of greedy in a way for them to be launching this. It's like, oh, we're going to try and get some of that demand. I don't see them being very successful. I'm going to talk about this as well with Morgan Stanley launching their own Bitcoin ETF. But it's like, why? I mean, why not just? It's because what you have here is you have BlackRock financial advisors, State Street, etc. And they're like, why are we recommending why are we telling our customers to go invest in somebody else's product instead of our own product? And so that's what this is. It's really more of an inside baseball meta game here amongst financial advisors, rather than any kind of material capital flows changing from this. That's kind of what I think.
Yeah, that's actually a really interesting way to put it. Yeah, no, I think this is good. Like, I mean, every time I've seen, just because I run Wolf Bitcoin, the majority of the time I see BlackRock or State Street is compared to the Bitcoin space, and they're looking to get their hands in everything. Like, they're trying to make the most money as possible. Obviously, their clients are actually one thing I maybe want to get your thoughts on here as well. So recently, as today, we saw Morgan Stanley launch their Bitcoin ETF, MSBT. And I saw a couple posts, and I was going to make a tweet about this. I may have, I don't know if I posted the tweet or if I was going to tweet it, but someone had put out a post saying, hey, like, Morgan Stanley putting out this Bitcoin ETF, trust further, goes along with the narrative that, basically they only did this because clients of Morgan Stanley wanted something launched from Morgan Stanley, because they were going to say, hey, I'd rather work with you guys, but if you guys aren't going to launch one, I'll just go with Coinbase instead, or I'll go with whoever instead, to get my Bitcoin exposure kind of thing. I didn't know it. I'm not sure if you know, but is that how it works? Like, is that the reason these guys, is it purely because the clients are wanting it and it's a better business decision for them to do it? There's also a clip here I want to pull from James Seyfarth, him speaking about it, but I didn't know if you have any thoughts on that, or if you have any intel on that.
Yeah, look, so it's because you've got financial advisors at more, so you have different segments of, like, it's a big firm, right? And you're going to have Morgan Stanley have 15,000 financial advisors, and some proportion of them are going to be saying, first of all, their clients are asking it, and the advisors anyway are probably, some of them will be Bitcoiners, right?
Yeah.
And they want to say to their customers, their clients, we think you should invest in Bitcoin. But they don't, the problem for them is they want to get a slice of the action as well, in terms of, like, if Morgan Stanley put you being their client in a BlackRock ETF, then BlackRock is getting the fees.
Yep.
So this is just their way of going, hey, if we're going to put you in a product, why don't we get those fees? Yeah. And they're coming in at 14 basis points, which is undercutting BlackRock's ETF by 10 basis points. But I have to say, I'm not extremely bullish about this. It's because there's a tendency with the ETFs amongst all, it's the same thing with QQQ, it's the same thing with GLD and gold, and it's the same thing with BlackRock's IBIT. What tends to happen in a commodity, in an index, with very few exceptions, is there's one winner that attracts all the liquidity, and it's like there is the Bitcoin ETF, the gold ETF, the NASDAQ 100 ETF. And so Morgan Stanley can try and launch an ETF now, and they might get, some capital. They got $30 million of volume on day one. And, like, yeah, I think they might get a material. Do I think this could be a profitable business for Morgan Stanley? Sure. But do I think this matters for the broader Bitcoin market? No, because most of the capital is going to IBIT, and it's not going to Morgan Stanley's Bitcoin ETF. And the fact of the matter is, they missed the, like, thanks for launching, guys. By the way, let me check the time here. About 2 years too late, essentially, right? Like this, they needed to launch in January 2024. That was the time. That was the time to compete. Right now, what's happened is that BlackRock's ETF has got all the liquidity, it's got all the capital, and that means that if you're a serious investor, you're going to want to invest in BlackRock's ETF. Maybe if you really care about the 10 basis points of fees, you might use Morgan Stanley's, because there's a tiny, tiny little clip of a difference in the fees. However, what you lose on the fees, you gain in the liquidity of your investment. So, if you want to buy, like, you can't buy $1 billion worth of Morgan Stanley's Bitcoin ETF. You can't do it. They don't have $1 billion to sell you. You can buy $1 billion of IBIT because the liquidity is so much higher. And what's more, because of the liquidity of the underlying instrument is so much higher, it creates liquidity of the derivatives. So then you can buy the ETF of BlackRock, and then you can sell calls, or you can buy puts. You can do all this kind of stuff. You can't do that. You can't really do that with Morgan Stanley. I mean, you can do it because you could own the Morgan Stanley ETF and then buy puts on a different ETF. I mean, you can do that, but in terms of like cross collateralization and having it creates a mess. People don't want it. Like it's not something that it creates slightly higher tracking error risk. It's like it creates all kinds of just like uncomfortable, like it's just not ideal. And so it's not going to happen. I think Morgan Stanley are late to the party. They will make a bit of money off this, and I wouldn't be shocked at all to see. That if sometime down the track they have, 5,000 Bitcoin in their ETF. Okay, yeah, cool, good for them. But BlackRock got, 700,000, 800,000 Bitcoin in their ETF, and BlackRock are heading to 1 million. Eventually, they will get there, and Morgan Stanley they missed the boat.
Yeah. And honestly, I'm not even sure if I'm going to play this clip because he doesn't say too much extra there. He does mention they're just trying to attract the few people left who haven't gotten into any kind of Bitcoin exposure or Bitcoin ETF exposure. But I think you're right; they're largely just going to roll with IBIT, especially because they're so accessible now. You can just get them on most platforms. You're going to have those folks who want to stick with Morgan Stanley and keep their portfolio in one spot. But I tend to agree with you there. Speaking of people who are stacking Bitcoin and not slowing down, I will say he continues to buy. I saw even this is talking about Saylor here. Saylor also for Stretch was able to accumulate more Bitcoin as well. So they're just continuing to stack. And honestly, with this reversal from the war, at least potential reversal on the war, and then everything ripped except for oil. Oil went obviously the other direction, but we saw everything have a bit of a bounce here. And we saw Bitcoin head into the 72s. We saw MSTR bounce to up like 3.5% today, down a little bit in the after hours now. But look, I want to say a big shout out to Rex Shares for this, because if you're trading these markets, there's tons of opportunities there for you. We tell you guys each and every week. There's plenty of opportunities, especially in the ETF world. And for the traders out there, if you're trying to capture the volatility throughout these days, check out their platform at Rex Shares. They got tons of ETFs. Just one I want to pull up here is MSTU. That's just double leveraged MSTR, honestly. And since MSTR is up 4%, you got MSTU pulling a 7% gainer on the day. So there is always something to trade out there. I highly recommend you guys, if you're trading, if you're good at this stuff, it's something you guys have interest in, to check out Rex Shares. There's going to be a link in the tweet down below the stream if you guys are watching, and it'll be in the description on YouTube. And definitely check that out. Like I said, they got plenty of ETFs, not just this one. It's just one I wanted to pull up since we're talking about the Bitcoin world. But there's all sorts of them, double leveraged, single stocks, just all across the board. You can see Tesla, Nvidia, tons of opportunities there. Definitely look, if you're an investor, carefully consider any fund investment objective, risks, charges, and expenses before you invest. The fund's prospectus and summary prospectus contains this and other info about Rex shares. And if you want to obtain the prospectus and summary prospectus, just visit their website at rexshares.com. Definitely read this carefully before you do any kind of investing. Again, that link is down the tweet below the stream. Super excited to be working with Rex Shares, one of our longest running clients. But yeah, dude, I mean, definitely a big time reversal here across the board on a lot of the charts here. What I was going to say, so if you have any comments on that, definitely feel free to. There was a couple other things. I guess this is the story I was going to roll right into from that. From Plan B, but I'll toss you the mic to either outline this specific story because you're the one who brought this to me, or if you have any thoughts on the ETFs there as well, definitely feel free to weigh in there.
Yeah, sure. So I mean, well, first of all, just on the micro strategy one and the MSTU, keep in mind, guys, that MicroStrategy is leveraged Bitcoin. MSTU is leveraged Bitcoin.
This is true.
It's leverage squared, right? It is like, and when we get these kind of volatile days in Bitcoin, you prepare to get your face ripped off in either direction if you have a trade on that one. I mean, and it's one of those ones, if you want to trade a specific event, it can be awesome because you're not going to have that, I guess you call it like the slippage, the leakage that comes from holding these positions over, So if you want to put on a trade for a day, for example, right? And we've seen this so much recently. We might see it again. Trump is putting on Truth Social about how he's going to end civilization. He's going to send Iran back to the Stone Age, or perhaps the next country he threatens to send back to the Stone Age. And the markets are down, and you think actually he's not going to send them back to the Stone Age, and you want to put on a position because you think there's a deadline in 8 hours and things are going to be positive. That's not a bad time for a trade over a short period. What you don't want to do is hold these super leveraged positions over any kind of long period of time because the down days are just going to kill your position. So as a trade, as a short-term move, can work. If you get it right, you can certainly do well. As a long-term move, it's going to crush. It's just not going to work. So that's just a little note for the traders out there. Worth bringing up Plan B. I'm glad you brought this up. This is his extremely famous stock to flow chart. Slightly less, almost dare I say, infamous now because
I think so.
It has been so busto, right? Like, so back in say 2020, 2021, this was an incredible chart. And actually, if you don't mind, Kate, let's give some kind of the background lore to this because not everybody watching this is going to really know the history here. So Plan B actually launched this chart late 2018, early 2019. You can see that blue dot section basically right in the middle of the chart. And Bitcoin was trading at around 3K at the time. And Plan B had put together this chart showing, basically saying, hey, Bitcoin is about fair valued, but I think, then me being as Plan B, but I think the Bitcoin is going to 20x in the next 4 years cycle, and you should expect Bitcoin to go up to say 50, 60K on average. It was about 50 to 60K on average. And now at the time, Bitcoin was trading around $3,000. What happened was Bitcoin pumped like you wouldn't believe over the time period. And so we got to 2021, Bitcoin is now trading at 55K. Everyone's looking at Plan B like, oh my God, your model has called this exactly right. And Plan B being this kind of taking on a little bit of the classic Bitcoin aesthetic. He's anonymous.
Yep.
You don't really know much about him, but he's just this smart, technical, mathematical guy. It's kind of like like a Satoshi in a way, but obviously nothing like Satoshi. But nonetheless, he's got this amazing model which has predicted a 20x increase in the Bitcoin price, and it has actually come to fruition. And what's more, this is only a few years after Saifedean's book on the Bitcoin Standard has come out, which also has discussion around why Bitcoin goes up in price. And while Saifedean didn't directly put this chart in his book, this kind of stock to flow model, Saifedean talked very much about this idea that the scarcity of the Bitcoin, as in the flow being what percentage of Bitcoins are coming onto the market at any given time by the mining, plays into the value of the item. And so, to be specific, this model is looking at stock to flow, which is to say at any given point in time, what percentage of Bitcoin or the asset is being mined at a given point in time. For example, when you look at the silver market, what we tend to see is about 10% of the total supply of silver is mined in any given year. In other words, the stock to flow is about 10 to 1, because for every 100 units, if there's 100 units of silver in the world, about 10 units will be mined next year. Whereas you might say gold is a harder asset, because what we tend to see is about 2% inflation rate for gold, which is to say, if there's 100 units of gold in the world, there is about 2 units of gold will be mined next year. So it has a stock to flow over a year of about 50.
Yep.
100 divided by 2. Now, what this observation was saying, Bitcoin at the time was a little bit less hard than gold, but it was going to start approaching that level. And this is the origin of the model. And that's why right now Bitcoin has a stock to flow, i.e. an inflation rate of its Bitcoin, roughly akin to gold. And so the model would suggest that Bitcoin's valuation should be basically akin to gold's valuation. And of course, gold at the time has changed, gold's changed in value now anyway. So truthfully, if you were to update this chart should be implying Bitcoin has a value close to $1 million today anyway. But the point is that it had this amazing track record up until about late 21, and that's when it all fell apart. And that's why Plan B went from about 5,000 followers in 2019, 2 million followers in 2021, and then, obviously a famous part of Bitcoin history, but ultimately kind of irrelevant. And anyway, that is to say, now we get to this. Plan B's come out and say, actually, I'm bearish now. He's predicting some more downward movements for this year, which, is not like unreasonable, by the way. I mean, I'm curious what you think, Cade, but Plan B is not the first person to point out that, hey, when Bitcoin has a bear market, it tends to be a bad bear market. And I think that's what he's saying, right? Like, essentially, we're at 70K right now. And if we're in a bear, historically speaking, we're not doing too bad in a bear market. And so there is some argument that, Bitcoin tends to bottom after it's gone down 70%. I mean, or even worse. So I think that's really all Plan B is saying. And who knows? We're going to have to wait. I will say, though, I just want to put this out into the ether, just to remind people, regardless, as soon as we get to the end of the year, everybody is going full bull. Yeah. Like, as soon as, there's still this uncertainty period where people go, oh yeah, we might go lower from here. and maybe we will. I don't know. But the one thing I will say is that the story, the narrative will completely change, because if you go back for the same logic which is making people be a little uncertain about this year, the same logic is going to apply next year when people go, oh, 2023, or 2019, or 20, go back in time, look at the cycle. Everybody is going to be called, all the cyclers are going to be, the cyclers that got bearish last year are going to be bullish next year. And that's just something to keep in mind, regardless of where this goes. It's not going to be bearish forever.
Yeah.
So I just want to point that out.
Yeah, it's like when you're in despair about something, you feel like it's never going to end. It's just always going to be like this. It's the same with the bearish behavior. Like a year is a really long time, and if the 4-year cycle holds October, we should be seeing some turnarounds, and this should be. I agree with you. I think end of year, unless we go full blown recession, which even in that case, you could still have pockets of. I mean, there a lot of stuff can happen in between now and October, like an enormous amount can and will happen. I mean, I can't believe how much has happened in the first 4 months of the year. I mean, dude, it's unbelievable how much has happened since Trump took office. I mean, you couldn't fit the amount of stuff that's happened since he took office. And you're like, dude, we'll have many, many ups and downs. But it is interesting. I guess it's not, for me, it's not, this story isn't crazy because, he's just another Bitcoiner, another guy with sort of a plan and a model that kind of worked for a little bit and sort of didn't. And now he's changing his tune a little bit. And this is largely like the thesis for a lot of people now that I'm seeing. Now that people have accepted in the Bitcoin world that we're not having a super cycle from last December, it's just going to kind of trend down for a little bit. And they're going to find any reason they can to, supplement that thesis, whether it's the war or whatever it is that they're saying is the reason it's down. It is basically followed along exactly as the 4-year cycle is played out. So depends if you're of the idea that the charts and prices lead the narrative, or if you're the opposite and you need a narrative first kind of thing. But from all my spaces and stuff, dude, like it seems to be that the chart and the prices, the people with money and the flows and all that stuff seems to be way more predictive. Like if you're looking at a chart and you're like, hey, look, we're at the top of a range here. There's nothing that's giving me indication we're going to blast through this thing. And we're starting to reverse here. It's like we're probably going to test at least the halfway down, or maybe we go to the bottom of the range again. You're probably looking for a story that's going to send you there, and more than often it ends up happening. And then people look at the story, they go, "Oh my God, that's why the price went down." And all the traders are like, "Dude, we knew the price was coming down. We just need to know the catalyst. It doesn't even matter what the catalyst is. We knew the price was coming down to the bottom of the range." So it depends which circles you're in and who you're watching and listening to every day, I think. But this is interesting, seeing Plan B come out and say this. One other person in the Bitcoin space was Adam Back, and you sent me this story as well. And I guess so he had gone on a stream, I believe, and I got to find the video because I was going to try and find it for this clip exactly. But he comes out and he says, "I'm not Satoshi, but I was definitely hella early." And I think this came from a clip where someone had asked, I got to find the clip. But
no, the context, by the way, isn't. There was a New York Times report, an article writing about how Adam is Satoshi. And
that's what it is. Got it. Okay, I saw that as well. Okay.
Yeah. That's the context. And the thing is, as well, it's by like a pretty serious guy. It's this John Carreyrou guy who, back in the day, wrote the book on Elizabeth Holmes's, like, her story where she had the dodgy blood sampling product and she ended up going to prison and all that stuff. He wrote the book on her, and so anyway, he's got this article saying he's done this big year-long research report and come back with the conclusion that Adam Back is Satoshi. I mean, good for him that he gets paid for a year to go. I'm going to go research who Satoshi is. I mean, how do I get that job? That sounds fun. I mean, the thing is that I didn't think there was anything particularly new in what he had in his research report. So a lot of people have wondered about Adam, of course. I mean, in fact, what's his name? The Cardano founder he said. Hoskinson said in the past, his pick for Satoshi is Adam Back. It's a very plausible pick, but there's been a lot of other we've seen so many other kind of big research reports coming out. You know, a few years ago was, oh, Len Sassaman is actually Satoshi, and of course, Hal Finney is an extremely popular pick, and there've been a lot of other. I mean, hell, HBO came out and did a documentary, I think like 6 months ago or a year ago, and you know, they picked someone else. So I take it as pretty low information, this report, but it's interesting. I do think Adam is a plausible pick. Obviously, he invented like proof of work, or at least co-invented proof of work in the 90s. So he has, you know, he's literally in the white paper as a reference. And I wouldn't be at all shocked if he was, Satoshi was in contact with him while he was in the process of building Bitcoin. I think that's probably what happened. He was, you know, but that doesn't mean that Adam is Satoshi. I mean, I'm curious what you think, Kate. I think Occam's razor, the most simple and obvious choice is probably just Hal Finney, because, you know, Satoshi's disappeared after Hal's dead. And by the way, there are so many other kind of basic things that make it seem like, yeah, it's probably not Adam Back. For starters, Adam is always out there hustling to try and make $1 right now. and I like, no hate, by the way. No hate on Adam Back. Like,
it doesn't seem like it's him, dude. I'll be honest. It doesn't seem like it's him.
Like
CEO Blockstream, right?
Go get your money. Like, go get your money at him. Like, I
like Satoshi's not doing this. You know, I don't know.
No, like go get your bags at him. You know, build your Bitcoin treasury company. Invest in these treasury companies and all that stuff. Build your bags. I got no, like, that's total respect for Adam Back. However, I don't think that's the behavior of Satoshi. You know, so yeah, like it just doesn't pass the sniff test.
Yeah, I don't know. I think it was Simon Dixon, who's a big time Spaces guy. He does all sorts of stuff on YouTube. Sure. He's big everywhere. He talks geopolitics. He talks about everything. But he's big on like following the money, and he's got his own thoughts on Satoshi. I believe his prediction was that I think it's Hal Finney as well. It might have been someone else, Super OG in those circles. But I wouldn't be surprised at all. Yeah, I'm sure they communicated a little bit and had some back and forth. I guess at that point too, there wasn't all this history to look back on now. So like, it was new. There wasn't Ethereum, Cardano, Solana. There wasn't this whole history of these other coins dropping yet. There wasn't even the option for this type of asset yet. Something that's super, basically gold but better, and also able to be used in a way instead of having to scrape two pieces of gold together and cut it in half, and kind of just way less convenient. Very portable. Like all the unique properties of Bitcoin, I think at some point will come to light and be important. I think right now Bitcoin is still dictated by it's just a risk asset that's a small market cap in a bigger conversation. It's a small shark, or it's a small fish swimming in a big ocean of sharks now. You know, it's in the conversation with all the big boys. Yet it's a $2 trillion asset. And you know, while people want to, it's literally the exact same as like the altcoins. It's like Bitcoin is basically the smallest altcoin and a fish of altcoins. And like, you know, Bitcoin is like the equivalent of like some random coin at the bottom of the list kind of thing. And they're screaming and hollering, go, hey, like we have all these great properties, like use us instead. And all the Bitcoiners at the top are looking down. They're like, no, you suck. You're a $400,000, you know, you suck. Like you're nowhere near our size. And so it's like the same thing. Like Bitcoin's like, hey, like, oh my God, look at all our amazing properties. And we do X, Y, Z. And all the people at the top are like, dude, you guys suck. You're a $2 trillion asset. What do you mean?
Yeah, the bond investors are like,
so they got to earn their stripes first. And, you know, Bitcoin's been around for less than 20 years or something like that. And so it'd be almost unreasonable to expect it to take over the world in 20 years. It'd be like, dude, so much would have to fall apart in like overnight fashion for something like that to happen. And then enough people would need to be on board with it and rip it. It just doesn't seem possible. Like not in that way. So I think it'll be a slow grind up. I mean, even something like gold took forever to make happen. That's a massive asset with thousands of years of history, and that still took forever for people to even understand why the heck people hold it. Like I bet a majority of people didn't even realize you hold gold for any kind of investable reason other than it's shiny up until this year. I mean, I could probably, like, you go on the street and you're like, hey, why would you hold gold? Like, what? Give me a couple reasons you should hold gold. I bet almost nobody would be able to tell you up until this year. And just from like the massive price action and all this conversation and the fact that everything is now on TV and social media, everyone's talking about Iran, everyone's talking about the conflict in Israel and all these things. Like now it's becoming topic of conversation. So I think things change. I think it's going to get faster as well. Like I think, something like a Bitcoin taking over and becoming a bigger part of an ecosystem could maybe happen faster than maybe it would have 15 years ago. It's still going to take time, though, I think. One company here that came out, this is the River founder, Alexander Leishman. He came out and called out a few different companies. I want to play like a minute from this clip here. He basically is kind of coming after the Coinbases and the Robinhoods, the people that sort of built out a platform and earned the trust of many thousands and millions of users for investing. And now, you open up some of these apps and you get hit with like hey, do you want to bet on 2-to-1 odds on the Celtics games tomorrow? And he's like, hey, look, what the hell? I thought we were here to help people out and get people to invest in good things long term. And now look at the way the industry has become.
These apps that were sold to users as, hey, come build your wealth, come buy stocks, like we're democratizing finance. And they're just calling gambling finance now. They did democratize finance. And then they realized, well, now that we've democratized finance and we have all this distribution, we can also democratize gambling. We're seeing these financial services companies sell a bunch of products that they would never want their family to be using. And that's what I take issue with. I'm Alex Lee.
Yeah, that was a powerful statement. A very powerful statement at the end.
Yeah. I think he has a very valid point of view. I feel like we can't go say too much about this. I mean, we are admittedly talking about leveraged ETFs in this product in this show too. So look,
well, I think he's specifically calling out companies who built out a platform first on something else and then are now calling it something else. Like I think that's maybe his like a very specific gripe. Like, I don't think he hates everything about these platforms. I think he's particularly zooming in on one thing, maybe trying to say, hey, let's make sure that people know what they're doing. Like that's why we're so gung-ho about saying, hey, you should know this is about trading.
Well, look, I'll say this about the clash. This is a clash of civilizations in a way in the Bitcoin community, and I'm being serious here. It's a real clash of cultures because there's a subsection of the Bitcoin world which is very heavy on moralizing. You should do this. You should do that. This is the way it's supposed to be. This is the moral, ethical thing to do. Yada yada yada, and then you have other people that are building financial tools, and it's like, hey, I'm going to build something, and if other people want to use it, cool, great. And this is capitalism, this is finance, this is making money. That's not, and you have this kind of clash of a moralizing worldview versus a give the people what they want worldview, and then there's the middle ground, which is going, yeah, you're giving the people what you want, but you're also pushing stuff on them that is not good for them. And I don't necessarily think, like, my personal point of view, I think a little bit of all of it is a good thing. I don't necessarily, I'm not a fan of the Melania coin, which comes out like, I'm just going to put out a pump and dump, and it's literally like, that to me is as close to a straight scam as you can get. And yes, it's a free market and nobody forced anybody to buy the Melania coin or whatever, but it's a scam. And, like, it's a scam and we can call it what it is. On the other hand, if somebody wants, if a Robinhood, say, Coinbase or whatever, say, hey, we want to provide tools for like, I don't know, leverage trading. And you might lose your money doing some leverage trading. Like, it's risky. On the other hand, it's like, hey, let people do what they want to do with their own money. And, you know, if they want to gamble it, so be it. And like, I don't know. I think there's grains of truth in what he's saying, but I also find it a little bit cringe as well. That's, you know, that's me. I just find it like, okay, thanks, Alex. But by the way, it's a little bit cringe. And also, especially, I don't like the, I'm going to moralize, and that's why you should use my service. Like that's also, I find it cringe. Okay, like I do, and so I'm not saying everything he's saying is wrong. I think he's got some valid points, but I'm going to shrug my shoulders a little bit and just say I find it a little bit cringe.
Interesting. I will say I was not expecting that answer. For me, I guess I don't find it cringe, and I'm kind of with you. Like, I see some good points here. For me, I don't much care. Like, I'm not huge on gambling. I'm more interested in just raising my income every single year and making sure that's happening. Like, if you have cash flow coming in, I'm more on that side of things, and then building up yourself, whether it's investing in yourself or your own business or things like that. I'm more so in that camp. I happen to like Bitcoin as an asset. For me, I'm more about convenience. Like, is River easier to use or harder than Robinhood? Like, am I going to get better access using Robinhood or Public or Coinbase or something like that than with River? Like, for me, like, Coinbase and Robinhood unequivocally have done better marketing. I know there's a lot more access. They're going to be at the front lines for everything possible because they want the most amount of users. And also, like, that, it depends, like, you know, the integrity of the founder too. Like, you know, if you have a company that's like River, a little bit smaller, more Bitcoin focused, but they really care about their customers, like, they're going to make sure that everything's done correctly. There are other companies who aren't as good at marketing. They kind of fit in between someone like a River and someone like a Robinhood, where Robinhood's, you know, they're going to miss some spots because they've got so many millions of things to think about and so many millions of users compared to a smaller company. But they've got their entire reputation on the line as like the everything app that always wins, has clean UI. They're on top of everything. Vlad Tanoff is famous. XYZ, Brian Armstrong is famous. He's bald. He's got a beautiful wife. Like, also all these sorts of things that, and they're on the front cover of everything. So for me, it's always just, it's more so about convenience and speed. So I guess I don't see the cringe side as much, but I do see what you're saying. And like, for me, I don't much care. I mean, as long as it's safe, and like, you know, if you're going to do self custody, that's an entirely different conversation. But go ahead.
I just think, you know, if you want to advocate for the way the world should be, you know, get into government, get into politics. If you want to, like, if we're in the world of business, let businesses operate and let the market take care of itself. Like, if people find, you know, Robinhood is not, well, first of all, I just think that people should take care of themselves. Like, tell your friends, don't do X, you know, you know, if you want to guide your family, if you want to guide your friends and say to them, like, some pretty basic, like, hey, maybe don't put all your money into some call options. Like, that's probably good advice. But equally, I'm like, what? So you don't want people to be able to, access leverage or what? Like, what's, you know,
Thomas says 2026, we need hot takes all the time. That's, I think that's what we're looking for. We need hot takes here. So we need someone like Alex to just come out and make a piece specifically for this. I think that might be a little bit of it. It's like, you know, something like that. Like, hey, we need something to talk about, something to say. I'm not sure this is part of a longer. So it is just a standalone video. Got it. Yeah, it's tough for me. Like, I see what you're saying. I definitely see what you're saying. It's tough for me because we work in the media game. So sometimes, like, you'll make a post just for the sake of making a post. You have no idea how it's gonna perform. Especially the ones that go viral. You never really expect the ones to go viral. Like, my friend Steve put out a tweet and he was talking about price action, and he was like, "Look, guys, if you're looking to short here, there's another leg higher coming," and everyone was roasting him. It like blew up overnight, and then everything ripped. And then he ended up being right about it. But it was one of the things, he was like, I was not expecting that tweet to blow up. He's like, I just went to sleep not thinking anything. And here he is, Alex Leishman. I'm not sure if he meant for this video to get a bunch of impressions and have us talking about it. But that's an interesting take. I was actually curious to get your thoughts. I wasn't sure what your thoughts would be. I guess I don't know. Like I guess if his main point is around you saying it's one thing and then just not calling it gambling. Yeah, I don't know. I guess in my head, I'm less forgiving of people. Like if you're gonna be out here and you're playing in the game, dude, like you're gonna get caught multiple times. You're gonna get cooked a few times. Like it's just part of the game. I don't have much sympathy for that. Like it's just one of the things you swim, you got to figure out where the shallow end is, where the deep end is, who are the sharks, where to stay away from, what time feeding time is. Like that's just part of the game. So
Yeah.
I'm not as concerned as like trying to call out a Robinhood or Coinbase the same way he is. But so I'm kind of more in your boat.
Well, that's my point. It's like whether or not people should be doing it, that's fine. But you know, I think like let's not start from the position where we assume, you know, people are just complete idiots and they don't know what they're doing, and then you have to have some kind of nanny that has to hold their hand. Like, no, you're not allowed to do this because this is, you know, don't you see that I'm the smart one here and I can tell you that you're, you know, that this is bad for you, but like let people do what they want to do, and you know, take responsibility for what happens to, you know, that's kind of it kind of, and if we really think as a society it's wrong, then fine, as a government we can make things illegal. That's fine too. And by the way, if you want to talk about like gambling ads or something, like, hey, I happen to agree. Like, it's gross when you're trying to watch a sport and you're getting flooded with these ads, and it's like, I'm just trying to enjoy. Like I don't want to hear about your, you know, like I don't need, you know, it is. Some of that content is gross. It's bad content. I just get flooded with it. I don't need to see it.
Yeah.
However, I just like, I don't know. I shrug my shoulders with this. It's like, oh, you know, don't use this platform because they're actually very naughty. They're very naughty. Use my platform because we
Sure. No, I see what you're saying. Yeah, I see what you're saying.
We're good guys.
Yeah, with the sports world prediction markets, I actually don't mind. Like I look at like a poly market or a Kalshi. I think it's fascinating. I don't particularly myself need to invest in a game with my money to be interested. Like I don't much care either way. Like I'd have to put thousands of dollars to feel something. Like I just don't care. This is just not my lane. I think it's fascinating to watch and keep up with the stats and how people are, you know, if there's a political thing happening or if there's a game on or something where I'm curious what the crowd is thinking. I care a little bit, but I'm personally invested. Like if there's a game on that I'm watching and I want Chelsea to win or something, like I care. But if we win, I'm like, you know, like whatever, great. Like that was my team. That's fine. I'm happy for them, but I don't care, dude. I'm not, you know, it is what it is. I think I'm just in a work mode right now. I just want to put my head down, grind it out and work. But no, I think this is interesting. We ran through a ton of stories today. We got basically through, I think all the stories actually. And we hit on everything. We went from Iran war, accepting Bitcoin in Iran, BlackRock, Statestreet filing for new ETFs, competing with the Qs. We have Morgan Stanley with their Bitcoin ETF. We have massive Bitcoin OG bulls out here saying, hey, maybe 4-year cycle type of deal plays out. I got all sorts of stuff that we talked about in this stream. It was fun. I hope for people who are watching, by the way, if you're enjoying it, definitely be sure to repost it. If you guys have any comments or questions, concerns, thoughts, definitely shoot the ETF Tracker account a message or a comment or something like that. Let us know. And definitely follow Thomas right above our faces as well. And follow Wolf Bitcoin if you enjoy these kinds of stuff. We put them out all the time. Wolf Bitcoin has spaces and streams as well each day. Thomas is keeping track with the Bitcoin world, Bitcoin ETFs, inflows, not flows, that side of thing. So there's a bunch of content coming at you if you guys like this type of stuff. Thomas, is there any final thoughts you want to throw in there related to these markets or anything you have coming up?
Yeah, I'll say one thing, just a little nugget for the listener that was interested in the Adam back is Satoshi thing. And I'll just put out a name for people that want to do a little bit more research.
All right.
It's not like a name that you often hear about.
Drop it.
John Nash. This is a man, this is the father of game theory. This is a man that has studied perfect money. This is a certified genius that is certainly capable of creating Bitcoin.
Interesting.
And not many people talk about him. There are rabbit holes You can go down, if you're a listener and you're curious, I invite you to go down these rabbit holes. You find it very interesting, and I'll leave it at that. I'll leave it at that.
So, Inventor of Game Theory from A Beautiful Mind, the movie, maybe. Okay, there is a bunch of hits here. I see Reddits, I see YouTube videos, podcasts.
It's a rabbit hole to go down. I'll just leave it at that.
Dude, fire! I need a rabbit hole. I'm going to be in an airport in a few hours here. And apparently I have to get there like 48 hours early because like TSA is cooked or something is what I'm hearing. So I'm like, great. So I'm going to live there all throughout the entire night since I have an early flight, it looks like. So I think I'll be doing a little bit of digging here. Cool. Fire. Well, I don't think I have any other thoughts. I guess I'll be diving down that. For everyone who's back at home, thank you all so much for tuning in. Again, if you want to check out Rex shares and some of the ETFs that they're offering, the link is down below in the description if you're on YouTube and in the tweet below if you're on X. We will be back next week